Thanks, John, and thank you everybody for coming on a Saturday to hear the story. I'm going to talk about Eagle Plains Resources. It's near and dear to my heart. It was started 25 years ago by my father and I, and listed 23 years ago on what was then the Alberta Stock Exchange, which is now part of the TSX group. Here's our forward-looking statement. It's on our website for those of you who are into that kind of thing. Read it slowly. Here's our overview. We are a project generator company. We do basically grassroots exploration. It's usually the highest risk. Well, it is the highest risk venture you can do in the mining industry. We get used to kissing a lot of frogs over the years, but we've also found out how to mitigate that risk, and that is through joint venture participation. So we develop ideas, we stake claims for relatively low entry costs, and we bring in partners to help explore. We've got, after 23 years of trading, we still have only 89 million shares out. We've never done a rollback. We're very proud of that fact. We're very healthy financially right now, despite not issuing shares all the time. We've got over $7 million in working capital. Of that, 6.2 million is in cash and short-term investments. So we've managed to not only survive this 7-year downturn, but we've managed to thrive throughout it. We've shopped at a lot of fire sales over the last few years. We've been very aggressive in acquiring projects, and we've got a very strong portfolio now going into what we hope is the next bull market run here. Part of our survival strategy has been the development of Teralogic, which is our in-house consulting group that works not only for us, but it works for third-party groups as well. It's a really talented team of young professionals. Teralogic generates about $300,000 to $400,000 a year in third-party work, but also does all Eagle Plains work for us and our partners. We own our own office building in Cranbrook, debt-free. We bought that years ago in the last bull market cycle. We occupy about 75% of the building. We have 15 to 20 full-time employees, and about the 25% that we don't occupy, we rent to a group of doctors who pay enough rent over the years that basically covers our overhead. So our operating costs for administration are nil, basically. We've managed over the years to attract a number of senior joint venture partners. Anyone in this business can tell you it's very tough to attract the majors and to get in the door to even talk to them, let alone have them come and partner with you. So over the years, we've done deals with quite a few companies. Teck now has still about 6% of the outstanding shares of Eagle Plains. We've got a current deal going with SSR Mining, which is formerly Silver Standard. Also done deals with Rio Algam, Kennecott, Billiton, Nova Gold, Alexco, many other big companies. This is our project portfolio. We've got over 40 projects, all in Western Canada. Principally right now we're focused on British Columbia and Saskatchewan. We've also got a number of projects in the Yukon and NWT. We've basically covered the whole spectrum of commodities. Anything that can be mined, we've got to target a project that hosts it essentially. This is how the project generator joint venture model works. It displays it quite well. The bars in orange are expenditures made by Eagle Plains from our treasury. The bars in blue are our partners' contributions to projects. You can see in 2011, this is the model in hyperdrive. We basically spent from our treasury about $500,000 that year, but we completed about $10 million in exploration on our projects. These partner companies are earning into our projects. We own 100% out of the gate, and they can earn up to 60 or 80% by carrying the load on exploration, assuming most of the risk of the exploration, and at the same time giving us cash and shares over the years, which has been really beneficial to us over the years. The bars in yellow here are the expenditures done by third parties through Teralogic. So usually Teralogic does $3 to $4 million in work outside of our work, and again that generates revenues that go into the Eagle Plains treasury. We also have a number of royalties that we've assumed over the years with all the projects we have. We now keep a royalty no matter what we do with any projects, whether we have an option deal or we sell the project outright. We keep a 2% NSR, which usually has a buy down. These royalties are in a lot of different commodities: gold, silver, base metals, uranium, diamonds even. And they're in multiple jurisdictions, again, in Western Canada. A lot of these royalties are held by big companies like Cameco, Denison, Areva, and so we're quite confident that these royalties will be on projects that are developed. They won't be dropped by these guys. And I think, there's a good chance these royalties could come into the money here. They don't cost us anything to maintain. A few years ago, we sold one of our 1% royalties for $1 million cash. So these things have value for certain. I can't stand here and guarantee you we're going to deliver 10 baggers to everybody, but I can guarantee you we've done it quite a few times in the past, and we intend to do it in the future. This is a look at our 20-year chart. It goes back all the way to 1995 when we listed. And you can see we had a pretty good run there from 2003 to 2011. The first spike there of 2,600% was when we spun out the Copper Canyon project back in 2007. It was ultimately taken over by NovaGold in a hostile takeover in 2011. The next big spike we had in 2011 was our Talon Zone discovery on our Iron Range project, which we're going to be drilling here actually starting next week, so I'll get to that. This is a look at our Copper Canyon delivery. We gave Eagle Plains shareholders a share of Copper Canyon on a one-for-one basis. Copper Canyon had a spectacular run too during about that same period that Eagle Plains did. So collectively over that 8-year period, we gave these kind of returns. And you can see in the period since about 2012, it's been flat, but we've been busy. And if you believe in periodicity, we think we're ready for the next one. As the market turns, I think we're going to as well. So this is a look at our share value with the spinouts we've done over time. The orange bar is the absolute value of Eagle Plains. So right now it's trading at about 14, 15 cents a share. But the red bar is the value of all the spinouts we've done over time. So if you're like me and are long-term and don't sell, my shares right now that I hold really have a value of about 75 cents a share with all the spinouts I've received over the years. The last the last color there on the last bar in blue is the Tyga Spin Out that we just did a few weeks ago. Tyga's trading on its own now, 18 to 20 cents a share. So this is a look at the Iron Range project. As John mentioned, we don't usually drill with our own money, but we like this one enough that we're going to. I showed you that chart earlier where we had the spike. We traded at about $1.20 a share on a couple of drill holes we did years ago when we had a partner on Iron Range. Providence Mining had an option to earn 60%. We did a bunch of work there, sort of lost the deposit. Providence got discouraged and went into Nevada, and they had earned a 60% interest in the property by spending about $4.5 million on it. In the downturn, we bought that 60% back from Providence for a share deal that effectively was about $35,000. So we've got 100% of the project now. We've relooked at all the core. We've gone through all the science. We did geophysics last year on the Talon Zone area, and we've developed 3 very strong targets that suggest the Talon Zone was just sort of the tip of the iceberg. Those 3 arrows there are the drill holes we plan on drilling. Again, the pads, there's people on site right now building pads. The drill shows up on Thursday. Drilling starts on Friday. So this is a look at 170 meters down from surface. You can see these very, very strong anomalies here. This is the Talon Zone mineralized shell here. This is what we believe is the offset, the fault offset to the Talon Zone. This other target here is a Sullivan SEDEX target. Basically, the Sullivan Deposit, if you found one right now, is worth about $40 billion. It's a magnificent deposit. There's always people in the East Kootenays looking for another Sullivan. We're like those others. But again, this target is one we've developed over the last 7 years, particularly focused after the last 5 years since we got 100% of the project back. This is the IP target at depth. This is 470 meters down now. And again, you can see this very, very strong geophysical anomaly showing up at the base of the Talon Zone. This is the Talon Zone here. So we're wondering if this is sort of the mother of the Talon Zone, that fluids may have migrated upwards into a breccia pipe that we drilled off with Providence's money back in the day. So John mentioned earlier, we just spun out Tyga Gold. We're quite happy with that. It was on a 1-for-2 basis. So again, it's like a dividend to our shareholders. Instant liquidity for people who wanted it. Also a good story for those who want to stay long on it. Our story there is focused around the CB mine, which is run by SSR Mining, formerly Silver Standard. Again, in the downturn, we were able to pick up a large land package. This is the CB Santoy mine complex here. This is our ground here in yellow. This is the Taberner Fault that extends all the way down to South Dakota and is related to the Homestake deposit. So SSR Mining has an option on our property here, on the Fisher property, And the geology of these other properties in yellow is very similar to the Fisher property. So we packaged this thing in hopes that Silver Standard will come and get it. And there's no guarantees that will happen, but we've got a good story. There's 2 drills turning right now on our Fisher property, and that's being funded by Silver Standard. This is off the Silver Standard website. The results of all their exploration they've done in the last couple of years have come up with this very strong target. They're mining right here. They've found the same shear structure all the way down into our property. This is about 12 kilometers long of strike. This is where they're drilling right now in this area. So this year we expect catalysts for people to make some money are the spin out, which is now completed, drilling on the Fisher project, which is underway right now. Iron Range drilling, which starts next week. We're always acquiring, we're always researching. Terralogic is expecting a very busy year this year. So we just think there's a lot in the pipe for everybody, and including me. I'm the biggest shareholder, and I'm very excited about what's coming. Thanks very much.